everyone, my name is Simon Snelder, and today I will be hosting together with our guest speaker, David Daly, about UAE Corporate Tax We Will Talk. So thank you for joining us. I will give later the word to David, but first I will give you a little bit of an introduction about what you can expect and the setup of this webinar. So, as you can see now, hopefully you can see my screen now. I want to give you a brief introduction about myself. So I have been 10 years working in the investment industry. I'm also certified, and I have done many type of master classes myself. And today I will let David speak more, but definitely we're going to ask you as well to be participating actively in this webinar. So if you have any questions, if you want David to answer anything, please just mention the question in the chat function and I will read it out loud to David so that he can answer it. So just a little bit more about myself. So I'm married, I'm from the Netherlands, I live in Dubai, and I actively help other people with good content. So these webinars that I'm doing, they're every month about different topics, and today we will talk about UAE corporate tax. Now, I'm also somebody saying I am muted. Yes, everybody's muted. If you have any question, you can just ask me by typing it, and then I will read it out loud. So there will be no talking except from me and David with each other. So I have many other masterclasses that you can find that we have done in the past, including about this topic, UAE corporate tax. So there was one that we've done in the end of last year. You can find the recording on my website, simonsnelder.com. And we did a full session also with a lot of Q&A, and every month we will have new ones there about a variety of different topics. Now, everybody attending this webinar will receive a certificate. So how does that work? You will receive an email after this session from our tech partner Cluely. So just make sure that you check your spam if you have not received it directly within 24 hours, or if you can check your spam or your junk email. If you have not received it, you can reach out to me and I will take care of that. You open the email and then you claim your credential, which will bring you to their website where you make an account. If you already have an account with them, that's no problem, and it will go faster. You activate it to make sure that they can verify that it was you because it's sent to your personal email, and then you download your certificate, and that will show that you attended this this webinar, and the certificate will look similar like you see on the left side, only with your name on it, this topic on it, and then you can have that for your own benefit. So without much further ado, I'm going to introduce to you David Daly, who is a partner at Gulf Tax Accounting Group. David is an expert on tax. He has been living and working in the Gulf for decades now. He's a wonderful guy who can bring alive this topic, which is normally difficult to grasp. So I'm very, very happy that I can sit down again with David. David, welcome.
Simon, great to be back. Lovely to have a chat about another wonderful topic. We seem to meet over tax quite a bit. Good afternoon to all of you who joined us, and thanks for being here.
Fantastic, fantastic having you here. So David, we had a webinar a couple of months ago. I'm sure things changed. Maybe you can just start this off and kick this off by explaining in general what is the new tax that will come for corporates, what is in general the impact for companies, and then maybe we will continue on what has changed the past months, what has been updated since then.
Yep.
And for the people listening, I'm also going to release a couple of polls during this session, and then you can participate, and then we'll give David also insights about where you're standing with your company. David, it's all yours now.
All right, thanks. Okay, the polls are really just a way of getting you guys to interact and give us some information for how you're thinking. What happened recently was we got the decree law, about 60 pages of legislation which details how corporation tax is going to work. I think the things most people are aware of is the rate, 9%, which by international standards is competitive. It comes from part of an international agreement called Pillar 2. And the object of Pillar 2 was that we would create a level playing field for taxation on corporate entities throughout the world. So it wouldn't just become a matter of the race to the bottom, because that doesn't work for anybody. So we are still relatively, compared to the rest of the world, going to be quite competitive. We now know when it's going to start, which is June 23. That's a couple of months' time. Now, that doesn't mean corporation tax applies to you from that point. What it means is from that point, it's live. So, and then it's going to kind of chase you. It's the easiest way to think about it. So if your financial year, and this will be in your articles or memo of association, if you don't know what it is off the top of your head, most people's is generally January to December. So what we have is the tax going live in June, and then when it bumps into your next financial year after that date, that's when corporation starts to impact your organization for that 12-month period going forward. And after that, you've got 9 months to prepare and submit and settle any amounts that are due. So that's kind of the high level. This is very different to VAT, and I think we should talk about VAT because we've done VAT. Corporation tax is new. And in many ways, VAT is you as an entity, for those of you who are registered, being a tax collector, because you charge VAT and you give it to the Federal Tax Authority, and you get charged, you claim it back, and you get it off the Federal Tax Authority. Corporation tax is about you. It's about a tax on your taxable profits. Okay. Now, what's a taxable profit? Some of you may have thought this through and gone, that sounds like a piece of string. And in many ways it is, because, well, what's allowable? So what's a cost? The indications we have so far are anything which is wholly and necessarily required in the conduct of the business. Okay, and we've heard that before with VAT. So certain things are going to sound familiar. That doesn't mean the treatment's going to be the same, but certain languages should be familiar to you. The big question we get asked is free zones. We were promised tax-free for whatever, depending on what the free zone constitution was. That's been honored. However, and there's always a however with these kind of things, it's a matter of whether you stay true to what the free zone was set up to allow you to do. And the idea of a free zone, which I think we're all aware of, is you're supposed to trade offshore. Okay, that's free zone to free zone, or free zone outside the UAE. Now, what happens if you do a little of both? Well, what they've done from a legislative point of view, and this makes sense, is they've said, well, you can't be both. You can't be all things to all men. That doesn't work. You're either one or the other. I call it pregnancy. You either are or are not pregnant. Therefore, if you do any business onshore, now I'll define that in a moment, then all the taxable profits of your business are subject to corporation tax. Okay? So onshore means doing business with a DED entity, okay? Department of Economic Development entity. We all understand that that is an onshore entity. B2C, individuals aren't free zones. They're consumers by definition. So if you're doing B2C, you're onshore. And there's the potential that some free zones might be designated as being onshore, okay? Now, for those, again, going back to VAT, and this is where if you've been through VAT, it helps. we all of a sudden had a distinguishment between free zones and what was now called a designated zone. And a designated zone is a fenced, a secure free zone. So we think of JAFZA. You just don't drive into JAFZA. You got to go through security. There's gates. They check who you are. What are you doing? They check your boot to make sure you're not smuggling goods in and out. Okay, that's a designated zone. That's a free zone for those of you who are from certain parts of the world where it's not as prolific as it is here. That's how we understand a free zone. So what they did for VAT purposes was they said, right, we're going to give it a different name, an enhancement, if you like. Okay, from a corporation tax point of view, same but different. Depending on the constitution of the free zone, are they going to be allowed to sit outside the corporation tax system? So we are going to get a list. With VAT, we got a list. We had a list of designated zones, and you can go online and find that. Federal Tax Authority, VAT, designated zones. Now what we have is, we're going to have is corporation tax free zones, which qualify to sit outside corporation tax. Okay, so I think that's fairly straightforward. Now there's implications to this. I've already said that what we have is, if you do a single dirham of business onshore, then you are onshore. Okay, keep that one in mind. That's important. So if you want to stay offshore, because that's what your business is, and you don't want to pay corporation tax, that's not a problem. You can do that. However, you are now going to have an external audit. So for those of you who haven't been through it, everybody knows their KPMG's, PwC's, the big four. We've all heard of them. Okay, so that's what we mean by an external audit. Not by those guys. That's for the very, very large groups. But there are a lot of different audit practices. So you're going to require one of them who are licensed as an external audit practice within the UAE to do your audit. Okay, and then you're going to have to submit that. What does that look like? I imagine that's going to be slightly different than what we've currently had, unless you've had an in-depth audit, maybe as part of an international group, in which case you're more used to a detailed audit. I think some of the local audits have often been lighter, and that's primarily, I think, driven by what the requirement of the audit was. So we don't know how that's going to change. We don't know how that's going to impact. And that's got a feed into what the likely fees are likely to be. And also from a labor point of view, there's going to be an awful lot more audits conducted. So it's a big shift for the industry, the audit industry. So we're picking up a question. Have you got documented standard operating procedures for VAT in your business? I know this is corp tax, but this has been asked for a particular reason. Answer it, and answer it honestly. You might as well. We'll give you a few minutes. What we're really talking about here is how you work. How is it that you currently work? Okay, because that's important, because it talks about preparedness. Excuse me, I think I pronounced that incorrectly. Tongue-tied myself. How prepared are you? And how good are you at getting prepared for what are quite totemic changes in your business? Okay, corporation tax is a big thing. And let me explain one of the things which is different, one other thing rather that is different between VAT and corporation tax. When VAT came in, for those of you who remember it, we got a raft of legislation about 6 weeks beforehand. And then it went live, people registered, you then had to start charging it, and then you started reporting. Some within 3, 4, or 5 months, as they created a staggered reporting sets of periods. Corporation tax is slightly different. Well, actually, it's from a time point of view, very, because for those of you with a January year to December, you're not going to start being in a corporation tax world until 2024, and you don't even need to report and pay until September 2025. The lazy thing to do is to do nothing and go off. It's a year and a half away. In fact, it's even further. That's a really bad idea because you plan. Okay, there's a reason we're business people here. We plan. We operate our business and we're planning, how do we grow? How do we get those customers in? Okay, corporation tax, we're planning for tomorrow, and we're planning for something which is going to impact us. 9% of taxable profits. Okay, that's money going out your door. That's affects cash flow. So this is something you do need to sit and think about. I'm going to talk later about how the legislation is structured, because that's also important, because that informs us how we get additional information, because we're going to get into, well, what level of information have we got already? How are we going to get more information? So we'll get into an element of trying to understand the granularity. Now, the poll just flashed up there. I don't have the numbers of how many of you voted. I know there's hundreds of you here. And it was 56 to 44, I think was the number. That is remarkably high. I was speaking at a conference in the Northern Emirates last week, and I asked for hands up. I did promise that I wasn't going to pick on anybody and ask them some detailed questions on it. I was just kind of more curious than anything, because again, this talks about behavior. If you're the kind of organization that has written down procedures, then you're going to be in a better place to deal with these changes and manage them. If you don't have standard operating procedures, and in my experience, and I'm here nearly 2 decades, you are sadly, and I mean this very, very sadly, a very, very common business in this country. We don't do it. You go to other parts of the world, things are documented. So if somebody, God forbid, gets hit by a bus or is in an accident of some sort, there's a document you can go and get, and in there is what Ahmed does. Screenshot by screenshot by screenshot. And it doesn't have on the front of the document if Ahmed gets hit by a bus. What it has is that this particular role carries out these functions, and this is how it is done. Okay, that's what a standard operating procedures manual is. Anybody should be able to step in. Now, depending on your size of business, you do or don't need it, and that's, again, quite understandable. But certainly, as you start getting more employees and you get quite defined functions, or even somebody who might be looking after 1 or 2 functions, this is something you need to have. You make a will. Why do you do that? To have your financial affairs in order should somebody pass, or should you pass away, and your family aren't running around trying to pick up the pieces. This isn't that different. And very, very few people do it. So if you are the people who do, 56% of you, well done. One of the things I would suggest from a behavior point of view that you consider is you either have an internal, if you're happy with your VAT environment, because that's the only tax environment you currently have, then move forward and do a corporate tax impact assessment on yourself. If you haven't done any of these things, then what you're trying to do is to get your mind into thinking about it. You need to start thinking about, how does this affect my business? Okay. One of the ways to do that, if you really want to delve, is get what's called a VAT audit. Get somebody in who will pretend they're the Federal Tax Authority and will audit you. And somebody who knows how this is done. So somebody who's actually been through one, or been through a few of them, preferably, over the years. And I don't mean in the last 6 months or the last 2 or 3 years, but somebody who's got experience of this type of thing. What they're there to do is to test your environment. And VAT is a good one to do, because VAT gets everywhere. It impacts everything. If you actually think about your organization, and we're 2023, we've had VAT since 2018, you've probably seen how it impacts all the different things that you're allowed to do. The little minutiae of the rules, what you're allowed to do, what you're not allowed to do. What it does is, as an audit, is it comes in and it looks at your organization. It's not just looking at accounting. It's looking at systems. It's looking at IT. It's looking at operations. It's looking at storage of documentation, both electronic and paper. Okay. It's looking at compliance. Right. So now your head as a business person is in a place where you're now thinking about what happens when there is change, and substantial change. Okay. So that's the reason I suggest you do that. There are people who do it. We do it. It's a useful project. It typically should only take a day. And one more thing just from that, a good audit isn't looking for how many mistakes you've made of a type. That doesn't matter. The reality is, if you've broken Rule 8A once, you've probably broken it a lot, especially if we're looking back now over 4 years. Okay, so a good audit looks at how many different rules you've broken at least once. Okay, doesn't matter if you've broken them multiple times. Trust me, if there's one, there's many. So keep that in mind. Legislation. So again, let's go back to VAT, because it's useful. It gives us an anchor. This is why I keep saying this. It is important. With VAT legislation, there were 3 levels. There was a GCC framework, okay? So, and then there was the decree law, which is what this is. And then there was what's called executive regulations. Now, why does it appear to be different this time? Well, first of all, there's not going to be a GCC framework because there isn't a common approach by the GCC countries to corporation tax. So that tier of legislation doesn't exist. Okay, decree law does, like last time. However, this time we're not getting exec regulations. So what are these things? So I always think of it in terms of property. We're in a country where property is something is foremost on our mind, and especially with prices currently. Think about the GCC framework as you and 5 friends getting together, buying a bit of land and deciding to build 6 houses. And you all agree that they have to be the same size, same structural build, okay, externally. That's your GCC framework. Your your decree law is how it's divided up inside. And you're all allowed, within reason, to do what you want indoors. And then you have executive regulations. They're the detailing. Do I want tiles? Do I want carpet? Do I want wallpaper? Do I want paint? Do I want plaster? Okay, so that element, that detail, is not coming out. We're not having executive regulations. For those of you who've read this, and I probably should have put this one in as a poll, it would have been interesting to see who has. And I ask this when I speak at conferences. What line is repeated a lot in those 60 pages? And that is, or as decided by the cabinet on the advice of the minister from time to time. Now, if you've managed to digest that, you're going, oh, you mean they're going to keep adding to it in that form? So there's going to be cabinet decisions. And if that's what you're thinking, you're correct. Now, if you've thought a little further, you go, oh, that appears a lot. Well, that tells you that there are an awful lot of things to come, and there are. I would suggest there's very few organizations today who can have 100% surety of how corporation tax is going to impact their organizations in full. At this point, we don't have enough knowledge. We do have enough to get started. Okay, there's some big stuff that can be done, depending on what it is you do. I would suggest it'll affect SMEs differently to MNCs and family groups. I'm talking locals here. And again, for different reasons. There is one interesting element in here. Withholding tax comes into being, but at 0%. So it now exists. For those of you who trade within the GCC, you've probably dealt with withholding tax before. It is 0%, but that's just waving the flag. We're here. So I think I've given you a lot to chew on. You do have the ability to fire in questions. I mightn't be able to answer them, and if I can't, I'll tell you. I might even tell you why, but it might be because the information isn't available. Okay. But just in summary, you can start preparing. For those of you who handle VAT well and handle the launch of it and handle it on an ongoing basis well, the likelihood is you're probably going to handle corporation tax well as well, because you have good habits. If you don't have good habits, but you're sensible, you can start developing those good habits. And I would suggest you start by appointing somebody in your organization, depending on size. It might just be you, who owns corporation tax. If you're big enough and you've got siloed individuals who look after different departmental functions, it is worth having a VAT audit. It's not a bad thing. It's a one-day off piece of work, and the thinking, the frame of mind that it puts you in terms of preparation and what hopefully it'll point out and discover will deal with problems before they become serious problems. Okay, so with that, I think, Simon, do you want to hop back in? I think I've spoken now for about a half an hour at a very high level.
Yeah, David, that was very interesting. I would like to invite the people to that are live now to ask questions to David. David has been summarizing and giving also more details about the corporate tax, but I'm sure some of you might have specific questions. Meanwhile, I'm going to also launch the second poll that we have for you, so that you can think about or write already your questions for David. And we're going to also show you now the second poll. Yeah, the questions, you can chat in the chat box on the right side. That's where you can chat.
Yeah, remember, guys, for those of you listening in, there's no wrong questions. There really aren't. You're here to learn something. I'm here to give you direction. There is no definitive solution out there as things stand. However, what we can do is have a discussion about what we do know, and at the same time talk about what can you do as an organization to make sure that you're ready. Okay, you can be, so why not be?
Fantastic. Yes, already we have some questions. I will answer all of the, at least I will, I mean, David will answer them, but I will read them out loud to David. I'm just finishing the poll now. We have around 60 people, 60% of the people that have voted. So I'm just going to give it a couple of more seconds, and then I'm going to close it, and then I'm going to share the results. Here we go.
Good.
Can you see this, David?
I can, yeah, 84%. Excellent. That's important. And by tax, by the way, I'm not just talking VAT, I'm talking corporation tax. Okay? We're talking withholding tax if you're trading outside the UAE with certain countries where that applies. I probably should have asked about regulatory regime. I mean, fundamentally, you're kind of dealing with the same departments. This is something for everybody to keep in mind. The corporation tax is a federal level tax. Okay? It's not an emirate tax. Okay, in the same way VAT is a federal tax. Well, actually, technically, it's not even a tax. This may surprise some people to find out VAT is not a tax. Legally, it is a levy, which is why it applies in free zones. That was the nicety, and you can blame the French for inventing it a long time ago, I think back in the 50s or 60s, 1950s and 60s. So yeah, it is important to, as I say, to have somebody who deals with that. So Federal Tax Authority are in charge of policing it. So keep in mind what the legal frameworks are. This is coming out of the Ministry of Finance, but it is going from a regulator, or from an audit point of view, a management point of view. Federal Tax Authority will be doing that. They, for example, the Ministry of Finance manage or in charge of economic substance reporting, but it's the Federal Tax Authority who do the audits. Okay, so do keep that in mind in terms of trying to think about who exactly am I interacting with, and also where do I get information from.
Fantastic. So we got a couple of questions. I'm going to go from the top to down. So the first one was by Swati, who asked, when do we expect a detailed guideline from the regulator?
You won't. What you're going to get, as I said earlier, is you're going to get cabinet decisions. So it's going to come at you in pieces. Okay, I would imagine what you'll get is clarifications on certain industries, certain types of costs, certain types of revenues, that type of thing. Because if you look, for example, at VAT, there's been a lot of clarifications have come out. I've lost count of where we are. I think we're 30 something, which have dealt with different aspects. So my expectation is that this will be something similar. We will get clarification after clarification. Now, when I asked as part of the polls, is there somebody in charge? Part of that person's job is to keep an eye on these clarifications as they appear, because it does sometimes change. I use the word 60 pages, and I use this for a reason. It's not a lot of law, okay? That isn't a lot of law, okay? And it's not in small little spidery writing. This is normal typeface, which I can read without glasses. Not that I have glasses. So there isn't much law. That tells you there will be much clarification, and not much law means things open to interpretation. You don't want to end up on the wrong side of that. So you need to be watching the clarifications as they come in. Keep an eye on the case law. This is important. This is your business. There are penalties if you get things wrong. And there, of course, all of a sudden you discovering that there are costs you didn't realize you were going to be paying, i.e. to the taxman and corporation tax, because you discovered that something is not allowable against taxable profits. So this is important. The problem is for people, I'm afraid, is because it's a problem in 2 years' time, people don't see it as something they need to worry about today. It does, because it crystallizes in 2 years. The sins you commit now, you pay for in a couple of years' time.
That's clear. Bastanius is asking, is there a threshold for tax?
Yes, it's $100,000, 375,000 dirham. So it's taxable profits in excess of that. And the question, of course, is, well, what's allowable against taxable profits? We don't know. We know some things, but not much. I have a lot more questions than I do answers on that one, and we are waiting for a lot of guidance.
Okay, Stuart is giving a note first that he had some trouble to get into the webinar, so maybe this was mentioned already before, but he's asking, if you are registered for VAT, will you automatically be enrolled in the corporate tax system?
No. And actually, it's a good question. Thanks, Stuart. No, you got to register for that separately, and you'll be doing that, we believe, through the Emirate website, which is the new website launched by the Federal Tax Authority on the 5th of December, which just about everybody by now will have interacted with, because you had to reset your password. If you haven't, and you're reporting this month, this will be the last cycle. So if you're one of these people who all of a sudden pull your VAT return a day or two before the deadline and put it in and pay it, and you haven't bothered to log in until now, you'll find your password is no longer active and you need to reset it. I suggest you get it done stat, just in case you run into any difficulties, and there have been some. Okay, so the Ministry of Finance have open registration for a couple of certain types of companies. Certainly those, as far as we're aware, whose tax years are, financial years begin in June. Okay, I've got one such customer and they haven't got their invite yet, so it's not ubiquitous. Just because you're a June to May company doesn't mean you got that invite. It's a separate registration. It's a one-off. There isn't a time limit. That's what I've been told. However, by definition, there has to be at some point. We know, for example, if you're late registering for VAT, it's a 10,000 dirham penalty. And that's not even the worst element of it. It's when you get backdated and now you've got to account for VAT you never charged. That's the real penalty. So you will need to register, and everybody will need to register. It's not like in VAT. In VAT, if your turnover is in excess of $100,000 or 375,000 dirham, you must register. With corporation tax, there is no threshold. You must register.
Okay, very clear. Everybody needs to register and everybody needs to do it separately. Now, Stephanie is asking a question. Currently, we use QuickBooks for our accounting records. Do you know if QuickBooks will be eligible to be used for corporate tax, or will we need to migrate to another platform? Thanks in advance, she's asking.
Hi. There's nothing wrong with QuickBooks. It's a perfectly good entry-level system. You won't have to do any modifications to it. All right, let's talk about events. This is something which makes people a little bit dizzy. Up to 2018, you had 2 events happening in your accounting. you had an accounting event, and you had a cash event. So I invoice Simon for 10,000 dirham for services, okay? So I have an accounting event because I raised an invoice today here in February. So I have sales, but Simon hasn't paid me, okay? So I have an accounting event. I'm owed money and I have a sale. Simon pays me 6 months later. I now have a second event. It's called a cash event. My bank account has now gone up and Simon has paid off his debt. Okay, they're two different events. And from an accounting point of view, they could happen at the same time, they can happen at different times. Because when he pays, then I have the second element of the accounting, which is debtors down, bank up. Okay, that's pre-2018. Then we got VAT. Now we got a third event. So let's forget about Simon and I for a second, and let's have me wandering in to buy a car. I'm a good customer. I walk in and go, I'll take that one. The guy knows me. He goes, no problem, Dave. Off you go. So I take the car in February. The accountant's on holidays, and he comes back and he invoices me in March, and I'm away on holidays, and I come back and I pay him in April. We have accounting happening. Oh, sorry, we have a service been delivered in February, and that triggers the tax event, the VAT event. We have an accounting event happening the following month, as long as it does within 14 days. And then we have the treasury or cash event happening the month after. Okay, 3 different things. And now we're going to have a fourth. We're going to have corporation tax. And that's going to happen 9 months, no more than 9 months after the end of your tax year. So it's not a problem. You can use QuickBooks for it. What's going to happen is you're going to have a set of financial accounts, and then you're going to have what's called a tax comp or a tax computation. Yeah, and what's going to happen there is you're going to go, I'm not allowed this. I'm allowed half of that. And you're going to modify your financial accounting for your tax. And that's what you're going to pay on. So now you've got financial accounts. For those of you who are accountants, I always remember in the early days asking, what was the difference between financial accounting and management accounting? The financial accountants tell you how many glasses are on a table. The management account tells you there shouldn't be any there, and they explain why. Okay, and tax computation is a kind of modification of that. Well, you got to apply the rules, so now the table looks different again. Okay, and it's that you pay on. So that's your future, I'm afraid.
Okay, great. We have another question from Stephanie. Also, can you please share the link where we can find the documents which you have regarding the corporation tax, the ones that you were showing?
There's only one, not a problem.
Yeah, so Stephanie, we will make sure that that will be sent to you. I think you found it somewhere, right, David?
Yeah, I'm actually just Googling it. You can Google corporation tax, and you can download the Decree-Law. That's what it's called, DECREE, Decree-Law, and you can download that.
Okay, fantastic. Eric is also having a question for you, David. He says that he got 2 companies. One is in a designated zone, one is onshore. The onshore company is importing from free zone. So in our opinion, their free zone stays away from doing business onshore. Free zone companies thought as well charges our onshore company for some services, management fee, etc., as most of the costs land in free zone, which is gray area. Last time we asked FTA, what is your call on this? Also in respect to corporate tax.
All right, we're getting into particulars. Okay, without actually reviewing how the trade is done in detail and looking at the contracts that are in place, I'll be just giving an opinion off the fly. You might as well ask somebody in the coffee shop. But I will say this, from a contract point of view, keep this in mind. There's always a buyer and a seller, okay? So who's buying, who's selling, where's the transaction happening, and apply the law of that place, okay? So I do get these questions, and what I always say is, right, contracts, please. I need to see who the contracting parties are. I need to see what the relationship between them is, and then I can tell you. But by way of guidance, and I did speak about this earlier on, where it's qualifying free zone to qualifying free zone, and even where the free zone is, when it's qualifying free zone to qualifying free zone, then that can sit outside corporation tax. That's fine as long as the entity, the selling entity, doesn't do any business onshore. You can't bifurcate them. By bifurcation, which means you divide. You can't just divide your free zone business from your onshore business within the same entity. What you could do is to set up an onshore entity or branch, and you could move or novate across all your onshore business into that, and then don't group for tax purposes. Now you're into tax planning, which is why I said you need to sit down and think this kind of stuff out. If you're having difficulty and it's making your head hurt, that's not surprising. I suggest you get somebody in who knows what they're doing to help you with that. And in the early days, it's going to be ongoing support, I'm afraid, as the legislation becomes clearer, and then we get clarification on what was meant. But with these type of things, yeah, you look to the contracts. What's the contract say? Who are the contracting parties? It's amazing in my years here how often I get into these discussions and there's a party being talked about, and I'm going, they've nothing got to do with this contract. They're not involved in the contract of sale between the two parties. They're being pulled in for one reason or another, but that's not how it works. I hope that helps.
Okay. Yes, and I think you try to answer the best as you can, and also basically it's like a little bit of like a landmine. You have these hidden places where you can step on intentionally or unintentionally, which can expose you to trouble. Is that correct, David?
Yeah, absolutely. A partner of mine calls them scorpions. You kick the rock and you don't know what's going to come out from the damn thing. And then you walk off thinking they're gone and you miss one. That's life.
Okay. Rajesh is asking, could you please explain the process for registration of corporate tax?
I believe the Ministry of Finance have released a walkthrough. I haven't seen it. I'm going to wait until I've got access to a FTA portal where registration has been allowed, and then I can see the two of them together. The reason I say that is there are walkthrough guides on the FTA portal. What I find with them is that they are screenshots and they're red. So what you find is that there's a computer voice reading out every single line on it, and it doesn't necessarily explain things to you as opposed to reads things to you. And that's a different thing. So at this point, pass. I haven't read the document. I believe it exists, but until you got general access to it, I don't know.
Okay, I'm going to release another poll, the third poll. So if people can please vote for that. Meanwhile, I'm going to ask you a question from Anushila. So she's asking, how easy would it be for an Indian CA to get a job in the UAE? How can they get a job? I mean, of course, this is a little bit off topic, but maybe you have a take on this, David.
It's not a bad time to be an accountant in the UAE. With another tax coming in, there's obviously more demand. It's about having relevant experience, both from an industry point of view and from a skill set point of view, and getting yourself out there. That's what I'd say to anybody who job hunts. I've done a lot of contracts over the years. I've had a lot of different roles, which is how I've ended up here. Network, and don't be afraid to network at all. The other thing I would say to anybody, and I have read enough CVs, oh man, I've read some terrible CVs. The amount of spelling mistakes. I saw one recently. Somebody spelled their professional body's name wrong. That's inexcusable. We're accountant. Well, I'm an accountant, and the person asking the question is an accountant. And one of the things we're supposed to have is attention to detail. If we can't even spell the damn name of our professional body, we don't deserve to get hired. Never mind even interviewed. Yeah. Get your CV right. And just a general one on CVs. My last one, it's been many years since I wrote one. I took 2.5 months doing it. I had 6 people whose jobs, friends of mine, peers of mine at my own level, whose jobs were to rip that apart and to embarrass me. So I would end up with a document with no mistakes and which I could stand behind because I'd actually done it. It didn't have errors. So for heaven's sake, it's what you sell yourself as. And if that's got errors, worse, spelling mistakes, totally inexcusable. And that's across any profession. Yeah? Get your grammar right. You're talking about attention to detail. For heaven's sake, spend some time on it. Okay? And network. They're the two biggies.
Thanks, David. That's definitely going to be valuable. I'm releasing the poll result, the last one that we had for the people. Can you
Okay.
see it?
Yeah, I can. 83% have never been issued a penalty. Good for you. A lot of penalties are automatic. You don't register on time. You put through a return late, you pay late. Those type of things. In the early days, you shared bank charges. That was always a good one. You end up underpaying by 15 dirham, and next thing you're penalised. It happens. The reason I threw that in there as a question was, and this is for you guys, we're not tracking which of you said you paid a penalty or not. This is about, again, thinking. It's about how you approach things. If you paid penalties, then the question you got to ask yourself is, do I pay attention to things? And if you haven't paid penalties, is it that you're very, very good and you're diligent and you do things properly, or you've been lucky? Okay? And be honest with yourself. Because when you're having that conversation inside here, you can tell the truth. And by the way, that's a good thing. It's a healthy thing. Have that honest conversation with yourself.
Yes,
Because
absolutely.
corporation tax is coming, and it's going to get a hell of a lot worse if you start getting these things wrong.
So we have another question from Amjad. What are the expenses going to be not subjected to corporate tax?
I think the question the person's trying to ask is what expenses are going to be allowable against profits? Yeah, I think that's probably what the question is. The only guidance I've seen so far, and I've been to Ministry of Finance presentations, is it's got to be wholly and necessarily required for the conduct of the business. Now, there will still be things not allowed, which you think, and by the way, just because you think it's wholly and necessarily required doesn't mean the Ministry of Finance do. Okay, different things, and that's just something you're just going to have to suck up and deal with. One of the ones I'm interested in, and haven't heard anything about it yet, is what happens with the purchase of assets. So when I was coming through training, you buy a car. Or yeah, you buy a car. Let's make it a car. Spend 100,000 dirham, you buy a car. It's an asset of the business. It's got the logo across the side of it. It's doing whatever it does, and it's got advertising for your brand while it's driving around the place. Okay. So you depreciate that over, I don't know, 2, 3, 4 years, whatever you think is reasonable. Now, when I was coming through the system, you couldn't write that depreciation off against taxable profits. There was a separate system called writing down allowances, which dealt specifically with the write down of assets. Okay, so again, we've got two different treatments. You've got an accounting treatment, you've got a tax treatment. Okay, I talked about events. So it's that type of granularity. Now, they may just decide it's fine as is, but we don't know. And I just give that as an example because there's going to be lots of these. And if you talk to anybody my age who's been around, worked around the world in lots of different environments, they will give their own version of that. But it's just to, again, this is about getting your mind into a frame of thinking about going, I can't just accept that this is what this is going to be. That's not how it's probably going to work. So you need to be questioning. You need to be watching the clarifications, and you need to understand them when they come out. They're not always written in very, very plain English. They can be written in quite a technical way, and you need to understand what the words mean.
Yes, Swati is asking a follow-up question. Sorry, we lost the voice. Can you please repeat again? It was related to her first question where she asked, when can we expect a detailed corporate tax from the authorities? But just to repeat your answer, most likely you will not get that. You will get something that is limited because that's just our experience so far. Nothing against the authorities, but it's just the way that they roll things out, that they will not like predefine and write everything out very detailed. They expect you to be hands-on. Is that correct, David?
Yeah, you're going to get cabinet decisions from time to time. I believe there's been one so far, I didn't look it up purely because at the seminar somebody said it, or rather, I think one of the speakers said that it just confirmed the rate of corporation tax at 9%, which is not very diligent of me at all. Purely, if nothing else, it will show me where the Ministry of Finance are going to drop these things, so I can bookmark it and I can look in from time to time to see what the latest ones coming out are. So yes, I will make a note to myself to actually go and find it and see where we're going to see these things being deposited.
Yeah, Imad has a question. Who will assess the correctness of the amount of tax?
That is a wonderful question. I've written an article about it. It's such a wonderful question. That's a really good question because I'll give you a personal example. My second last job in the UK, I was FD of an IT firm for 5 years. I used to get my auditors to do my tax comp. And so they would actually produce it as per the rules. And the rules were the rules. I didn't argue with them because they knew more than I did. And I was generally happy with what they had prepared. So, is it going to be you or is it going to be the auditor? That's a really good question, because then we have a larger discussion about liability. Well, if you give that to your auditor to do, what happens if it's wrong? I don't know. And there's so much I don't know. But these kind of conversations are great because when I get asked questions, I go, that's a bloody good question. I hadn't thought of that. That's got implications. So conversations are good. And these type of events are fantastic for that. This one I'm aware of is, I don't know. I don't know where liability is going to sit. I mean, if you ask an auditor to do it for you, surely if they mess it up, it's their problem, not yours. And then, of course, you get into a bit of a bun fight potentially on the back of the auditor saying, well, based on the information you gave me, that was a reasonable assessment. Now, keep in mind, I spoke earlier on about, and this is where, okay, it can get slightly farcical, it feels, but it isn't. We get down to contracts. As far as the Ministry of Finance are concerned, the entity owes money. It doesn't care that you, as an entity, are arguing with your auditors over the final number which was sent in. That's not their problem. Ministry of Finance are effectively contracting with your entity. You contracted with an auditor to come up with your numbers. They're not party to that. They don't give a damn about it. That's not their problem. Okay, so that's a good working example of why you think somebody's party to something when they're not, from another party's point of view. So, great question. I don't know. Let's see.
Okay, so Imad, I hope that this provides more clarity on your question. We have another question from Abdul Aziz. He's asking, will this corporate tax apply on e-commerce, small individual businesses, and will we pay the corporate tax on all profits?
Okay, Abdul, I am assuming as an e-com business, you may be a B2C environment or partially B2C. If you're B2C, all your taxable profits are liable to corporation tax, assuming it's happening in the UAE. If you're selling B2C to Europe or to the States, then no. Okay. The idea is, what are you doing trade-wise in the GCC? Are you trading with an onshore entity? Are you trading B2C? Okay, or are you trading with a non-qualifying free zone? So that's the test. But yeah, I know a lot of people certainly on the online space where they're doing online trading may feel that they sit outside it purely because they don't see themselves as a physical business. But no, it doesn't work like that. You'd have to look at the particulars.
Okay, I have here some update from Stephanie. She found it. She
I'll
Googled
send you
it.
the link
I
as well,
think.
Simon, so you can share it with everybody.
Yeah, so
it's
that's great.
ministry mof.gov.ae//wp-content uploads, and you'll find it in there.
Okay, and then let me see if we have some more questions. I think we have a couple of more questions from Sabik and Eric. So I will first start with Sabik because he just came a little bit faster than Eric. Will having a free zone registration helps a mainland company having branches across GCC in tax planning? Sabik is asking.
Sorry, ask the question again.
Will having a free zone registration help a mainland company having branches across GCC in tax planning?
Oh, I see. Okay, fair enough. I think this goes back to what I was saying earlier on. So you're a free zone company, and what you want to do is to bifurcate your onshore business. So what you do is you create an onshore entity, and then you put all your onshore business into that entity. You don't group for tax purposes, and therefore the branch entity pays corporation tax because it's trading onshore, and the free zone entity, if it's only doing non-GCC business or qualifying free zone to qualifying free zone, doesn't. Yes, would be the answer to that, as we currently understand things.
Okay, Eric is having a follow-up on his previous question. To hook up onto the topic just before, I recently, 2 weeks ago, spoke to FTA, and they mentioned that liability is there on tax consultants if you sign up for FTA registered tax consultants, and they do your VAT return submission. In his words, it will be their fine and problem only. The person that he spoke with.
Yeah, you're talking about tax agents. Okay, so this is something actually good you brought this one up. So there are people out there saying, I'm a tax agent, I'm a specialist. A tax agent in a UAE context is a federal tax authority, exam passed individual in Arabic in VAT, not corporation tax, VAT. Tax agent, VAT, not corporation tax. Okay? There isn't enough law out there at the moment for anybody to be an expert, other than the good people at the FTA themselves. So yes, that's absolutely correct. In terms of the liability, a tax agent is jointly and severally liable, along with the entity, for advice given and depended upon. That's my understanding of it. Now, let's follow that through, because that's actually quite interesting. The full list of tax agents is available online. You can Google it. FTA, UAE, FTA tax agents, and they'll give you the full list of them. Have a look through and see how many major audit practices have a registered tax agent. And the reason for that is how new the law is. So why would you put yourself into a position of potential liability when the law is as fluid as it is? So ask yourself that question. But yeah, people have done it. I wonder in some cases, I think it's been done out of good intentions. I think it's a good idea what the Federal Tax Authority have done, but it's unquestionable that one or two may be using that as a marketing tool. So be careful.
Okay, Imad is asking, will there be auditors or consultants who will stamp the financials for tax purposes also?
Well, this is what we were chatting about earlier. I'm assuming so, but I mean, look at Western Europe, for example. I mean, where I trained. Yeah, you go to your external auditor. They don't necessarily do your tax comp. They can. You'll pay them first. You can do it yourself, and they will then. They're doing an external audit, and they'll sign off what they need to sign off on. So yes, I'm sure other practices will do it. That makes sense in itself. And should you ask them to do it? I don't think that's a bad thing. As I say, I did it 4 or 5 years with one company in the UK and did a perfectly good job of it. But it's a mature tax environment. So the legislation has been around and been built on over a period of time with practices that have been around for a very, very long time. This is all new. So I don't know. It's difficult to advise, other than it's, as a rule of thumb, it's not a bad thing, because that this is their bread and butter. What we don't know is where liability sits.
Okay, Farag Mant is asking, how is the tax calculation of limited liability companies?
Corporation tax applies, again, if you get into the legislation, it's not just about a corporate entity. So you've got two different types of, I'm just trying to find the words. You've got two different types, or actually you've got multiple different types of legal entity. You've got a corporate entity. You've also got natural persons, which is me as a human being, Simon as a human being, and so on. I'm just trying to find the wording here for it. Anyway, anybody can be taxable in their own right from a corporation tax point of view, because you can be taxed as an individual. Now, the question that arises out of that going, well, I can't trade if I don't have a legal entity. That would be illegal unless I'm an Emirati. So yeah, there's a bit more to that, but just as a general rule, if you're trading onshore, your taxable profits are taxable in excess of $100,000 at 9%. Okay, it doesn't matter. Don't worry about the FZCO at the end, the LLC, LTD, and whatever else. That's academic.
Okay, and the last question for today is another scenario. Rajesh is asking, it sells goods or services only companies in free zones.
Oh, okay. So again, that comes back to is it qualifying free zone to qualifying free zone? So we're waiting for the list of all the free zones that qualify. And I have no feeling one way or the other whether any free zone is not going to make that list. I have no idea.
Okay. So I'm going to round up this this webinar because we passed the hour and we had a very active Q&A. So first of all, if anybody has more questions about this topic, please reach out to David. As you can see, he's an expert on this topic. My name is Simon Snelder. I want to thank everybody for participating in this live webinar. You will get an email later where you can claim also a certificate if you want. It will be sent directly to your email. David, thank you so much for joining us again today.
Always a pleasure.
It's a pleasure having you here. And like I said in the beginning, you make this topic more alive. And I'm very grateful for that. So thank you and wishing everybody a great day. Goodbye.
All right. Thank you, everybody.